Hey everybody, welcome back to Chart Request Live. My name is Patrick Dunawilla. Joining me today, we got Sam. Sam's going to be on the charts today. How you doing?
I'm okay, Patrick. Tough loss yesterday for my Kansas City Chiefs. I'm still mourning. I plan on eating a big lunch, probably more food than I should, just to eat my sorrows away. But it's all good. Um, Hell of a game by the Eagles.
Yeah, I think they surprised a lot of people last night. But what do you think of these markets? For once, we got a gap up this time, right? Not a gap down. Or I'm not sure.
Yeah, and it was kind of unclear what would happen on Monday, but we saw, I think it was Friday night, and then we saw more on Saturday and Sunday, but just the same tariff headlines keep hitting the markets. But seems like the market is maturing and not getting so anxious whenever those headlines come out. Is that the
Yeah, I
way
mean,
you're reading it, or am
yeah, I
I
mean, we
missing
kind of broke
something?
that pattern, right? The last 2 weeks we've had, well, actually, the last three Fridays we had a sell off into the close, and then you had a gap down the last two Mondays. So we kind of broke that spell. So that's a start, right?
Yeah,
Um,
for sure.
and you're not too far from all-time highs. You could, I think, look at the last even 2 months as a healthy consolidation. So
For sure. I'm showing here the DAX futures. I mean, this is as important of a country, probably the most important international index. I think I would make that argument. Aside from the United States, Germany is probably the most important stock market. Would you take the other side of that? Would you say Japan, China, one of those?
Listen, I mean, it's very correlated to the U.S. market. I wouldn't disagree at all. I mean, this one's heavily weighted to the financials. So if the DAX is doing well, financials are probably doing all right. That's a pretty good sign. So, no, I wouldn't push back on that.
For sure. And
And you
there,
are seeing a nice move from international. I think EEM at least um, had one of its best weeks versus SPY in like 4 months last week. So you're seeing China get a bid today. Um, and we're going to look at that in just a second. Actually, one of the first requests is KWeb here. If you want to take a
yeah,
look at
let's look
that,
at
dive
KWeb.
right in.
Yeah. So KWeb is the Chinese internet fund. This is like, what's the American internet? It's not
I
IGV.
think, would you compare this to ARK? I mean,
Yeah, I think, yeah, you could say that. This is the
it certainly
Chinese
looks
ARC.
similar, right? You got this massive rally in 2021, then peak, and then just trying to form this base ever since, right?
For sure. The lines look pretty similar here. I've overlaid this red line is ARC, and then the blue line is KWeb. And you can see that they're very similar, with the one caveat being ARC has already broken out, while KWeb has not. But I
But
think the
you're
bet
looking
here
for a
is
similar
KWeb
thing,
catches
right?
up.
Like you're going to be looking for the VWAP from the peak to be recaptured, things like that. Um, so even if the components aren't, necessarily analogous, like, maybe KWeb's a little larger cap tech than something like ARC, but the point is structurally they look very similar, right?
For sure. And last week looks like a really big candlestick here. So this is the VWAP from the all-time high
Mhm.
from looks like February 2021. You failed there in the beginning of 2023. You failed again in May 2024. You finally broke above it late 2024, then whipsawed below it, and then
Yeah,
last week.
September for Chinese stocks was just, I mean, that was off to the races. That's where most of that move happened last year, and then gave some back.
Right. It just it was a pretty orderly consolidation though. Like you did retrace a large part of that move, but it was all very well under control. It wasn't like a market crash or anything like that. It was just a consolidation. Like it was
Right, and
painful if you were long, but no reason to sell.
yeah, and I think when it's in this phase, this kind of reversal phase, um, I think just the fact that it didn't make a new low here is enough, right? Like just seeing those corrections make new or higher lows is something you want to see.
Absolutely. Yeah, that's what makes an uptrend is higher highs and higher lows, and then it doesn't have to be a straight line up, as painful as these consolidations can be.
So what are you thinking as far as levels,
So
target?
did we have a someone request this like for a trade idea? Should we outline some levels?
Yeah, I don't have a time frame, but if you could give us some levels.
Yeah, so I think the first target is about 50, let's call it. You could say 51, but 50 is a nice round number. And you can be long above this shelf of former highs from 2022, 2023. I think you could just ignore this little false start move from October. I don't think there's too many bag holders there. That shouldn't be much of an issue. But yeah, this one's shaping up really, really nice. I think the path of least resistance is about to shift from sideways to higher. And this could be a 1, 2, 3, 4, 5 even bull market. It could take many years to play out.
I like it. And last time I checked, short interest was still pretty elevated. It was, I think, around 12. I'll check here just a second, but in the meantime, we can move on to the next one. It's ESTC, Elastic. Looks like a package software.
Elastic. I would not have guessed that was software. So this is about $12.25 billion. Open source search and analytics engine. That's cool. I have not seen this one, to be honest with you. So looks like we have some type of cup and handle shaping up here. Looks like, yeah, you found resistance at that 61.8 retracement level back in early 2024. But the buyers have stepped in and kept this one from reversing lower towards this this low from early 2023 when technology was bottoming as a index. And if you're a real cup and handle aficionado, I think they teach you that the handle should have a down sloping resistance line, just like this. Is that how you learned it, Patrick, or is that just me?
I'd have to dust off my textbooks here, but wouldn't argue with it.
Yeah.
I mean, we could even draw like a little head and shoulders there too, if you're into that. Point is, it's shaping up, right? Basing
Absolutely.
slowly but surely.
Yeah. It's been painful, but I think this one is shaping up quite nicely. I think you can get long here above that. I don't know what you call it. 110 to 115, that range. You could even call it 120, 110 to 120. It's a range. It is what it is. But that's the level there. And I think from there you can have an initial target of this 130, but I think you're ultimately looking for this former all-time high. That looks like around 190. So this is shaping up quite nicely. I think we could benchmark this to the S&P. And once again, you have a nice reversal pattern, just like you do in absolute terms, relative to the broader market. This one's also trying to start a new period of outperformance. So this is a great find. Who brought this one along? They need a shout out.
Do not have a name for this one. So Mystery Man.
Mystery Man. Shout out Mystery Man.
Shout out Mystery Man. So we got one more in the mailbag, kind of light mailbag today, and then I promise we'll hit the chat. That's where the fun starts. So next one, another software name you might not have heard of, Manhattan Associates, and that's ticker MANA8.
Yeah, this one is getting blasted.
Yeah, I'm seeing looks like they might have had some CEO changes or something.
Ooh. Is this one a fraud, Patrick?
I'll dig into it.
So
my fundamental hat on. My forensic accounting hat on.
Let's see. Yeah, yikes. Big yikes. So relative to the S&P 500, it has lost this key level of interest. The peak from 2015, early 2016. This one is just getting completely blasted. So you not only didn't find any support there, but you just sliced right through it like a hot knife through butter. This is pretty gross in relative
So
terms.
it sounds like just from what I've gathered here, it sounds like they guided down on earnings a um, few weeks ago, and that's when it fell like 25%. And then looks like in today, the CEO retires and a new guy steps in. So
Mm.
things are happening.
Yeah, the market does not like what this company's doing.
Yeah, apparently not.
Yeah, the market's the best fundamental analyst is how I learned it. So
There
if
you
it doesn't
go.
like it, I'm not interested either. So really, this is the key level to watch here. This 180, let's call it 180 to 190, that range. Buyers need to step in here and prevent this one from losing this former high from the last cycle. It peaked there in late October, early November 2021. Um, so yeah, am I missing anything here?
No, I mean, no, I think you nailed this one. I mean, this is, I'd call this one a falling knife. I mean, not sure there's a better name for it, right?
Yeah, stay away from this one.
Yeah. I mean, with a lot of those like declines like this, you kind of, if you are going to give it a chance, at least let it stabilize, let it stop going down first. I know that might sound basic, but something's got to stop going down in order for it to start going up, right?
I think that's so incredibly wise, Patrick. I love when took that from someone else, but that's so true. It just comes down to an object in motion tends to stay in motion. So if this one's trending lower, why the hell would it reverse just out of nowhere? It needs some reason to reverse. Otherwise, it's just gonna continue falling.
Yeah. All right. I got a mid-cap industrial for you. You ready?
Ooh, those got me excited.
This one comes from Mr. Zerby. He's always bringing us some good ones.
Shout
So,
out, Mr. Zerby. He was in my DMs this weekend.
indeed.
Believe it or not.
Shout out. Let's FLS. He says mid-cap industrial play tied to AI and nuclear energy, breakout from the 2020 highs, targeting 2014 highs and above.
So this one's worth $8.3 billion today. They're from Irving, Texas.
Okay.
I think that's a big football town, if I'm not mistaken.
Oh yeah.
Um, I'm
It's
not from
Texas.
so who knows? Let's move to monthly candlesticks, make this look a little bit cleaner. But really, this is what you're dealing with here is a breakout above these highs from, let's see, looks like 2018, and this level has been very important to the market for some time. I bet if you zoomed all the way out and fibbed it out, you could find some extension right here. We don't need to do that though for these purposes. What we're trading here is a bearish to bullish reversal pattern on a pretty long time frame. So I think if you are interested in buying this one, Mr. Zerby, I think you should have a longer time frame. I'm thinking 6 to 18 months, anywhere in there. But you not only want to, assuming you bought this breakout at about 55, 56, you want these former highs from 2014, which comes in around a little bit above 80. So you have 40% upside from that breakout level. But from there, I think you want to bet on this one breaking out to new all-time highs and hitting this first Fibonacci extension level. So 121 is the level I'm looking at. That makes sense. You get that $100 roll. We talk about it all the time. Shawnee Baby is a big fan of those, and he's really instilled that in me, that the market really pays attention to and respects these big round numbers. And once they are overcome, the market tends to overshoot those levels and go 10, 15 points higher. So I think this trade makes a lot of sense here. It just depends on if you have the patience to see this one through.
Yeah. To your point about the $100 roll, Palantir is given a masterclass in the $100 roll.
Yeah, my goodness. What an uptrend that is.
I know. And I'm not gonna lie, I thought it would at least, pause at that fib there for a sec. Then just ripped right through.
I think it took one session for it to consolidate there. I think it wicked up there one day. Let's look here. I have the chart. So that earnings day, it wicked there. And then you got one consolidation day, and then God candle once again.
Yep.
New all-time highs.
Yep.
This thing is
Oh
such a
man,
beast.
imagine how excited those bears got on that tiny little red candle.
You have to be such a pathetic human being to be bearish Palantir. I mean, come on. What are you doing with your life?
If you pull up Hims looks awfully similar to Palantir, like Palantir like 2 months ago. I think that's kind of a interesting comparison there.
No, that's a great point. It looks very similar. There's a lot of charts that look like this.
Yeah.
Especially the SPAC daddies. They got to their SPAC price late last year, early this year, and they've just been consolidating sideways for some time. Like ASTS comes to mind.
Yeah.
Last week you engulfed like a whole quarter worth of action, and you're squeezing higher once again today, up 20%. But
yeah,
this pattern's incredibly powerful.
Totally. And honestly, I mean, it looks nothing like a cup and handle, but I think that the general kind of market psychology is kind of there. You have the big rounded consolidation, you got the all-time high, and then you got this correction, this corrective action, profit taking, but very orderly, very clean. And now you're breaking out again. Looks like that thing wants all-time highs again.
Absolutely. This one's a wild child. So let's look from the spring of 2024 to the fall of 2024. This one rallied like 2,000% and basically a straight line. It didn't really have any significant corrections. Like you had a few gross looking weekly candlesticks, but they were immediately bought up. So how I learned it from Kenny Glick was you should be looking for space, rockets, and robots to buy. I think that's a great
Robots
quote.
in space are hot. They sure are. You got a target for this one? What are you thinking?
I think 40 is the next stop, but ultimately I think this one's heading towards the 60s. 63 and a half is what I'm looking at.
Ooh, man. And it was $2 last year this time.
Yeah, like not even a year ago. It was $2.
So we got a ton here in the chat. Thank you guys all for dropping these. Let's move on to, I'm going to skip the VIX. Let's do GLBE.
Do you not like doing technical analysis on the VIX?
No, we're sticking to the roots,
Yeah, no, I like
Unless you want it. Hey, listen, if you want to break down the VIX, go ahead.
No, I'm no VIX expert. I already have this one marked up for you. It looks like H Chan's in the chat requesting GLBE.
It sure is. Yep.
So this is Global E Online. I believe this is the Israeli. Yeah, so this is an e-commerce platform. I think it's pretty similar to what Shopify has going on.
And Sam, talk about the right pond, man. Like pull up that Israel chart. Just show the people what's going on there.
Yeah, so Israel outperformed the United States in a big way last year, along with Argentina and China. And this is the ARK Israel Fund, which has a lot of the more speculative, high growth.
I wasn't even looking at that one, but I'm glad you brought this one up.
Yeah, because this is really what you're looking at. We were looking at a K-Web earlier.
Very similar, yeah.
Very similar. I'll overlay them for you so you can see how
Very
similar
similar,
they
but
are.
totally different components.
Yeah, exactly. Like, it just speaks to the power of intermarket analysis. None of these markets operate in a vacuum. They're all connected together. The arc of the United States trades with the arc of China, the arc of Israel. Go on down the list, but they're all similar. So yeah, this is what we're talking about. This is a great pond to be fishing in. Israel is absolutely on fire right now. It's reclaimed this 38.2 retracement of this nasty drawdown from the prior cycle. Next stop is 29. Let's call it 30. This one's in a brand new uptrend, but let's talk about Globe. So you can see it was an early leader. Let's just, for the sake of talking about intermarket analysis, let's look at Globe relative to the ARK Israel fund that we were just looking at. And this one clearly is a leader. I think we could do something like this. Let me draw this a little cleaner. But in my
So
opinion,
is this thing just one giant triangle since it oh okay. This is a
I
ratio,
think it's
sorry.
more of a cup and handle. I was talking about those downsloping resistance
Okay.
lines on the
I
cup
see
and
where you're
handle
going.
earlier, and this is
I like
um,
it. I like it.
case number 1 million of this. I've seen it time and time again. I don't know why it works like that, but boy, does it work. So the breakout really happened in the middle of November. You've just been consolidating sideways there since then. I wouldn't be surprised if this one's ready for a new leg higher. In relative terms, you've already seen Globe break out in absolute terms, so I think it's just a matter of time before it follows in relative terms. But we're trading the price here, so if GLBE is above this 57.5 level, I think you can be long with a first target of 83.5, with a secondary objective of 125.5. Shout out H-Chan for bringing this one along. Banger chart.
All right. Let's see. Trey wants to see SPY, Copper, Uber. So why don't you decide, Copper or Uber? Which one do you want to do next?
Let's look at Uber. They had some interesting news last week. Mr. Bill Ackman is getting involved with the Uber, which is pretty interesting if you ask me. He's a pretty legendary investor. So the market has reacted extremely positively to that. So here's where it happened was last Thursday. You got an 8.5% God candle, followed by another 6.5 the next day, and you're following through with another 5.5% today. But this thing has absolutely ripped higher since Bill Ackman got involved. And this comes on the heels of a negative earnings reaction that it had the day before Bill Ackman revealed his stake. The stock beat top and bottom line expectations, but fell 7.5%. So the market did not like whatever they said in their report. And I was marking this one up kind of like a potential distribution pattern. After that report, it just did not look very good. You had one test here, and then you failed to hold that level in August. You broke below it. You ultimately bottomed on August 5th, but you failed to hold that low again in December. So I thought it was time for the bears to really take control of this one.
Listen, Sam, it was in a hairy spot last week before this
It
move.
was, yeah.
It was I looked at this one on Wednesday, I wrote about it, and I know exactly what you're talking about. I mean, it was at that level where it had to do what it did. So no, you were absolutely right, I think, to approach it with caution last week. What's the matter? Your crystal ball was in the shop?
No, I think I would come to the same conclusion 10 times out of 10. Like,
Yeah.
I don't think I was wrong, but the
No.
market proved this one had more upside left. So the analysis could be right, but just the outcome wasn't what I was expecting, and that just speaks to the underlying strength in this security, really. Whenever you see a potential distribution pattern that the bears fail to resolve, I think you need to look closer as to what's going on there. So I think Uber relative to the S&P is also important to look at. Mr. Trey. So we were just looking at the absolute chart, and it was making we were pretty close to new all-time highs. But when you look at it relative to the S&P, this one has gone absolutely nowhere since it IPO'd back in the spring of 2019. But it is potentially shaping up to be some type of head and shoulders, the inverted kind. So not the bearish head and shoulders top, but this looks like the left shoulder there. This is the head, and then we're carving out the right shoulder of a head and shoulders. So that's how I see it in relative terms. So not bearish at all there, but in absolute terms, I think there's nothing to do right now. If you missed this breakout above 68.5, but next stop is 82, this shelf of former highs. I think the market will find some sellers there, but above 82, I think you could have a new trade. Let's just get rid of these markings and fib out this range. So 82, a breakout above 82 will get you 99. So maybe some resistance at 100 to be expected.
Okay. So we got a ton in the chat here. I see Kenny in the chat here. He says ASTS classic faux show, bro, on all time frame. Sorry, but he wants to see
out,
Elf or Bill. So Elf or Bill for Kenny.
Yeah, let's look at Elf. This one has really been a disaster recently. So this one was an early leader in the bull market. It broke out of a pretty textbook base. I think that was early 2022. Yeah, or the summer of 2022, let's call it. But you broke above there, entered a brand new primary uptrend. Elf rallied about 600% in a matter of less than 2 years. So that was one hell of a trade. But since then, things have really fallen apart. You have resolved a pretty textbook head and shoulders pattern. So here's how I was looking at it. You had a little
What do
bit.
you think? Is that pattern been met? Is the target already hit, or what?
Let's measure it out. So this was the neckline, and you gapped below it on the first week of February there, just to reinforce the idea that this neckline was in place. So that's just extra bearish to me. So you asked to measure it out. So 220 was the top, and then you have the neckline at, let's call it 99. So that's 120 points, let's call it. So that's not exactly helpful. We could measure the percentage. So from this 220 level down to 99, it's about 50%. So from 99, you should be expecting another 50% drawdown, which would give you about 48.5 as a price target, which would coincide with this lower wick here. I think that makes a lot of sense. Just looking at the chart.
Knowing Kenny's time frame, he's probably a little shorter term, and he's probably looking at this earnings reversal. So they gapped down, was that Friday after earnings the night before, but buyers stepped in, and then you're getting upside follow through today. So Kenny's saying, thinking of holding some above 72.50. What do you think?
Yeah, I can't say I would ever do that myself, but I understand you are on a much shorter time frame. Something like this gap fill is what you're looking for. So you have this VWAP from this earnings gap. You whipsawed below it a few times, but ultimately the buyers supported the stock. And here you are making new highs. I think that does make a lot of sense. A potential retest of that level, and that wouldn't even be a retest of this neckline that we drew earlier, which came in at 99. So
Right.
this is I don't think he's asking for very much. I think that makes a lot of sense, and really that would be one hell of a trade.
Yeah,
You could get
72.50
20% in a
seems,
few days. I don't hate that.
yeah. Um, so I want to hit one more Chinese name that I know you're familiar with, KC,
Yeah,
Microsoft.
this one
This like the
just has
Chinese
not
Microsoft?
given people a
What's
chance to
the
buy.
what?
I was just saying this one has not given people a chance to buy. I
I
was
know.
talking to Mary about this a few days ago, and she was like, "It's so extended, Sam. I want to
Yeah.
buy a retest of the breakout level." And it's like the best uptrends do not let you do that.
Yeah.
So people keep chasing it.
I remember looking at it three weeks ago and thinking the same thing. Like, oh, I'll wait for like a consolidation pullback. This thing just hasn't done it.
That's such a sucker move. You got to pay up when there's a good uptrend. Who cares what the price is? Just market order, buy, buy, buy. That's how I see it.
Well,
You know.
you still need a good risk level to lean against, and if you don't have it, if risk and reward isn't there, it's tough.
Well, the reward is you still have hundreds of percent to go. Like I think this one's heading towards the 72 level. So I see what you're saying. It's hard to define your risk, but the reward is pretty damn juicy. So yeah, that's an interesting philosophical debate there. Um, Market orders versus limit orders. No, I think that you have a brand new level to define risk against here. This low from the IPO comes in around $18. You can see that we just gapped above it on today's open. So not only is the market not consolidating below that level, but it's just gapping straight through it. And that speaks to the incredible strength and resilience of this uptrend. I think you can define your risk there at 18, which is you're risking 9 pennies at this point in time. Ultimately, the target is this 70, let's see, 74 and a half is the ultimate target. So 18 to 74 is a little over 300%. That's how I see it.
Whew, pretty clean one.
Yeah, I think you could fib it out too. Maybe if you're more of a short-term trader, you take profits at this 29 and a half level, which would make an awful lot of sense. Former support turned into resistance right here. Here's probably some bag holders there, but
All right, let's check out INOD.
okay. Let's end on this one, Patrick.
Yeah.
So this is super high and tight. I think this one has popped up on my freshly squeezed universe on several occasions, and sure enough, I'm looking at 15.5% short interest. And you have just such a textbook continuation pattern here. This is really a thing of beauty, and I think we should zoom out first to talk about just long-term trend here. So you peaked in the dot-com bubble and just went absolutely nowhere. You failed to break out during the COVID bull market. You failed to break out in 2023. And then in the middle of 2024, you just blasted right through that level. And here you are in a high and tight bull flag, with the upper bounds being, let's call it 45. I think you could also drop a VWAP from the November 12th session, in which you closed above on Friday. So this one Looks pretty ready to go to me. What about you, Patrick? Do you think this one's ready to go?
Yeah, I mean, it looks like that consolidation's been pretty clean and up there at the top of the range. Worth a shot.
Totally, totally. So how should we look at a price target on this one? I mean, of course, we could use the long-term Fibonacci extensions, but um, I'm thinking you just measure out this move from 13 to, let's call it 50. So that's what, 35 points of potential upside. So that gives you a price target of 85 out of this consolidation. Um, would you do it differently than that?
No, I think that looks good. Makes sense.
85. Who brought this one along?
Um, that one, I believe, Alex.
Alex.
Yes.
My man,
Yeah,
this is a
Alex.
great chart. I have not been watching this one very closely, but I'm throwing this one on my watch list. And this is my chart of the day. This is a great looking chart. What did you like the most from today's Chart Quest Live, Patrick?
You know, I think I'm gonna keep it simple and go with the K-Web. Um, and you know, just that pattern in general, I think looking for those kind of reversal bases makes a lot of sense right now.
Yeah, it's gonna end up looking like the Arc of the US, the Arc of Israel. I like that a lot.
Yeah. Well, thank you guys so much for watching. If we didn't get to your ticker, I know we didn't get to all of them here, so be sure to just email us at questions@stockmarketmedia.com. And I, myself, Alfonso, or someone from the team will break it down for you on Thursday. Don't forget to join us again. Smash the like button. Sam, got anything?
No, I'm gonna go eat a big lunch, eat my sorrows away after that Kansas City Chiefs loss yesterday. That was
Nice.
tough.
Nice. Well,
Have
thank
a
you guys
great
so much. We'll
day,
see you on
everybody. We'll
Thursday.
catch you on Thursday.